Ladies and gentlemen, thank you. Ladies and gentlemen, good morning. Welcome to Fidelity China Special Situations Annual General Meeting. It is 11 a.m. And as a quorum is present, I'm delighted to declare the annual general meeting open. Thank you for coming. I'm Mike Balfour, Chairman of the Board of Directors, and also present is Dale here at the front, who many of you will have seen before, and he will do a presentation later. We're joined also by my fellow directors. Starting to my immediate right is Vanessa Donegan, Senior Independent Director. And next to Vanessa is Alistair Bruce, Chairman of the Audit and Risk Committee. Further along we have Georgina Field, and next to her we have Edward Say, who flew in this morning from China. Good effort, Edward. And at the right at the end is Gordon Orr. To my immediate left is George Beyer, our Company Secretary, and on his left is Claire Dwyer, the Head of Investment Companies at Fidelity. Before we start, I'm happy to confirm that no fire alarm is planned, and in the event of an alarm sounding, we will ask you to leave the building following the green signs. In terms of the running order, I will address the formal proceedings of the meeting, and then which will then be followed by Dale's presentation. The presentation will include a review of the past year and his thoughts on the outlook for China. After the presentation, there will be the opportunity to ask questions, and then we invite you all to join us for refreshments and a chance to spend a little time with the board, with Dale, and with other members of the Fidelity team, so please hang around afterwards. I will now explain how to submit a question for those of you at the meeting in person and for those who are attending remotely. For those shareholders here physically, we'll be using a roving microphone. Please raise your hand, and if you wish to ask a question, and then I'll invite you to do so and usher the microphone over to you. If you're attending the meeting using the Lumi electronic platform and would like to ask a question, please click on the messaging icon in the navigation bar at the top of the screen. You can then type in your question in the box where it says ask a question, and then press submit. I will now, and that will come through, I think, to you, Claire, does it? Yeah. I'll now start the formal part of the business of the meeting. The notice of the meeting has been made available to all shareholders, and if there are no objections, I propose to take the notice of the meeting as read. Our voting procedure today will be by way of a poll in accordance with the company's Articles of Association. The poll will be conducted using poll cards, and for those of you attending physically and for those of you who are attending remotely, the poll will be conducted using poll cards for those of you here, and for those that are attending remotely by using the voting functionality on the electronic platform. If you've submitted your vote before the meeting via a proxy, you do not need to re-vote on the poll card or vote electronically unless you wish to change your proxy vote. For those of you attending in person today, you will, I hope, have been given a poll card upon registration with the registrar. Everybody got a poll card? Yeah. If you're entitled to vote as a shareholder, proxy or corporate representative, but do not have a polling card, does anybody not have a polling card that feels they should have a polling card? Thank you. One coming your way. I'll now take a few moments to explain the voting procedure that we will use. You can vote at any time during the proceedings until I declare the voting closed. For those shareholders who are attending online using the online meeting platform, the voting icon will appear on the navigation bar. Once you click on this, the resolutions will appear on your screen. Simply select one of those options to cast your vote. If you change your mind, simply select another option. You can change your vote as many times as you wish up until the close of the poll. Your vote will have been submitted when the voting option icon changes colour, having selected it, and a vote received message is displayed. There is no submit button. I now propose that each of the resolutions as set out in the notice of the meeting is put to the meeting. Resolutions 13 and 14 are proposed as special resolutions. All other resolutions are ordinary resolutions. To be passed, an ordinary resolution requires votes in favour amounting to a simple majority of the votes cast. For a special resolution, 75% is required. With that, I declare that the voting on the resolutions is now open. Voting will remain open throughout Dale's presentation and the question and answer session, and will close upon my instruction later in this meeting. I will, of course, give all shareholders a warning when the poll is about to close. I would now like to invite Dale to give a presentation to you, and after the presentation, Dale will answer any questions you have.
Great. Well, it's excellent to be here. Lots of familiar faces. It's been an eventful year in China, so I look forward to getting into some of the details. Standard disclaimer. We'll kick off, as we usually do, with just sort of some basic background in terms of the sort of general economic backdrop. So for 2025, as you probably know, the GDP growth is 5%. As you see here, consensus and also the Morgan Stanley, these are forecasts from Morgan Stanley, they have forecasts below that. And that's despite the first half coming in at 5.3%. So the challenge we have going forward is really what's going to happen to this yellow bar, or this yellow block, which is net exports. So I'm guessing we're going to be talking about tariffs. Later today. That's obviously a big subject, but this is where the fear is. The net exports have been a significant driver for the economy. As tariffs go up, there is the expectation that will be less of a driver. Looking at some of the other factors that are contributing to growth there. So in investment, manufacturing investment has actually been relatively strong, but it's been offset by ongoing lower investment in the property sector. Obviously, we're still going through a relatively tough period, for the property sector, so that continues to be a drag. But the real area I think we need to focus on here is in orange, so the consumption, household consumption, where that goes. And as you can see here, in terms of the expectations to 25, it's more or less flat. I think expectations here are pretty low. Trends themselves in consumption have been pretty low, and we'll get into some of the reasons that I think are behind that. But these low expectations, I don't think are necessarily a bad thing from a market's perspective. I do think, if I think about sort of the balance of potential outcomes, there's more potential for that to actually surprise on the upside than downside going forward. And we'll talk about positioning in the portfolio, but I think consumption is a really interesting area, given that it has lagged, and there's a lot of value, I think, in that space. So in terms of the action from policymakers, you can see that both on the fiscal side, in terms of bond issuance, but also in terms of the monetary side, in terms of rates, the government has taken action. Particularly, I think, from September last year, the rhetoric is showing an increased focus on driving growth. Fiscally, on the left, that's coming in the form of rising bond issuance, which has supported policies such as trade-in policies in areas like autos, white goods, The debt raising and spending that's happened in infrastructure has lagged. So it's a key focus for us, how that could potentially pick up going forward. RMB loans is really from the private side, and this is where we need some improvement in business confidence. And again, hopefully more actions from the government going forward can help to raise business confidence. In terms of those policies going forward, we take the view that there is a lot of focus on where tariffs end up. So obviously we should have visibility on that in the next few months. And I think you can expect some, the government basically tweaking policy depending on where that level of tariffs come in. But I do think there's good potential for increasing support from the government, particularly to offset, that negative impact from tariffs and the impact on net exports. So onto the property sector, this has clearly been a major drag on growth, for the economy. Basically housing starts we've seen, are down about 70% from the peak. So as I mentioned earlier, that drag from investment has been a drag for the overall economy. The expectation for most people is that drag itself probably peaks this year. And that adjustment in investment actually isn't all bad because that's limiting supply to the sector. And we have the view that that has good potential to improve pricing in the property sector. We're in a stage now where we're starting to draw down on inventories. Obviously, the trends are quite different by the tier of city. Tier 1 is doing better than Tier 2 and Tier 3. In terms of how that is impacting pricing, you're seeing it here. It actually, on the month-on-month pricing, it does look quite bumpy, I must say. But for basically 5 of the last 8 months for secondary pricing, we've had price increases. So I think the general trend is one of stabilization for pricing. And this is, in my mind, really important when we talk about the impact that that has on the mindset of the consumer. Obviously, it's a significant asset that sits on the balance sheets of consumers. So just the expectation that pricing stabilizes, I think, is quite important in the mind of the consumer. Demand is still there. Maybe not as strong as it is in the past, but general things like upgrading and replacement will still definitely be drivers. So again, I think there's good potential for pricing to stabilize, and this is important, I think, for consumer confidence. Okay, tariffs. We do need to talk about it. I think in general we probably talk about it too much when I think about the impact that it actually has on companies. One of the data points I like to cite, if you look at MSCI China, which is our benchmark, if you aggregate all the revenues by region, the US accounts for 3%. So we spend a lot of time talking about tariffs, but the actual impact on the companies is actually generally quite low. Obviously, there are companies that have higher exposure, but it's relatively small. Now, obviously, the impact of tariffs will have broader impact on the economy. There's a general expectation that tariffs will probably be a sort of 1 to 1.5% impact to GDP, assuming we end up in a range of, say, 30-40%, which I think is probably where consensus is now. So it's not insignificant, but I do think this point is overly focused on in markets, and that definitely comes through in the discussions that I have with clients. This chart on the left, I think, is significant because we're trying to express here some of the discussions that we have with companies on the ground, and it does reflect, I think, the power dynamics between the US and China on the element of trade. So we're looking at China's share of US imports relative to the US share of China exports, and you can see that obviously the China share of US imports is actually quite high across a range of categories, and this is something that we often find when we're talking to companies. And obviously, we're talking to companies all the time. It's like, when these tariffs hit, what do you expect the impact to be? Very few of the companies across a range of industries are worried about market share loss. And the reason is most of the competition is also Chinese with the same supply chain. So the discussion comes down to one of price elasticity. And it's, okay, when prices go up 20-30%, what's going to be the impact to volumes? So that's the type of discussion that we have to clients. And the way the tariff discussion has evolved, and it looks like tariff rates are going to come in. Obviously, we had that escalation, and now we're coming back to normal ranges. I think perhaps there's or maybe a realization on the U.S. side of that power and that reliance on the China supply chain on the U.S. side and the potential impact that it could have. The chart on the right is again just another representation of what we discussed earlier. Clearly, net exports have been an increase in contribution to growth relative to consumption and relative to investment. So it is important that we start to see that turn in consumption, and I think that's increasingly recognized within the government. Okay, so coming on to the consumer, as you see that the drop in consumer confidence, it's more or less flatlined post-COVID. When we think about the factors that are playing a big part in consumer confidence, it really comes down to two areas, and that's expectations around asset prices and expectations around income growth. So when we talk about asset prices, again, we've touched on property. I think there's good prospects for the property pricing to stabilize, and again, I think that can contribute to a slowly improving consumer confidence outlook going forward for the consumer. In terms of income growth, the numbers actually aren't that bad. Based on the numbers we see, you're seeing income growth of probably sort of in the 5 to 6% range. I think one key driver that's going to be important here is what happens in terms of earnings growth for companies. And we're probably looking at sort of high single-digit growth expectations for MSCI China. There are people who still have numbers in the double digits. For the trust itself, we're looking at over 20% growth in earnings for the companies, for the aggregate earnings that we have for the trust. So, I think we probably are overly indexed to the companies that are doing well, but it's fair to assume that basically profits are growing, and therefore that has more potential to come back to consumers in terms of better wages. And again, hopefully that can feed into better income expectations and help to slowly improve the outlook for consumer confidence. In terms of household finances, as we've discussed, the spending power for the consumer is there. The consumer has underspent relative to incomes, really from COVID. So you've seen, the consumer balance sheet, notwithstanding what we've said about property, improve quite significantly. You've got a buildup of cash on the consumer balance sheet, debt levels are down. So again, with some stabilization in consumer confidence, there's a lot of resources to draw on in terms of seeing, a slowly improving outlook, for the consumer in China. Okay, on to, another big thematic, and that's just, the pace of innovation in China. We always try to find ways to express the sort of discussions that we have with companies, because meeting companies all the time, we see that level of innovation, that investment, and how companies are just becoming more competitive. So we try to find ways to express that, and I guess one way of expressing that is just patent applications. So you see China approaching 50% of patent applications. We see similar trends in scientific papers, and that's just the ones in English. So, it'd obviously be even higher if we included the ones in Chinese. But, it's just, for us, one way of expressing that level of innovation that we see on the ground. And one thing that's, supporting that is just the investment in R&D. So again, I think this is something that's underappreciated. Companies have basically compounded their R&D spend at over 20% for the last 15 years. So that's really significant. And you see that gap in overall spend with the US closing. We shouldn't, when you think about those types of trends, we shouldn't be too surprised that the companies are as competitive as they've become. You're seeing the benefits of that coming through in competitiveness in pricing power for companies. It's a really important trend in my mind. Perhaps one example of that increasing competitiveness. I know we've talked about this in the past, and it's become more, I guess, understood in markets, and that's what we've seen in the auto space. So China has gone from number 5 to number 1 in the space of 3 years in terms of auto exports, and they're producing 60 to 70% of the world's EVs. So this is a trend we see across other markets. And again, I think something that's underappreciated. If you're producing that much volume, leveraging domestic market, part of the reason they have that market share in the domestic market is over 50% of cars that are sold in China are EVs. So it's a huge, it's the biggest end market for EVs. But the companies are leveraging that, massive volume, that investment in R&D that we've talked about, and that's why I think they're so competitive. And this is just, this is market share of OEMs. The market share of the supply chain, areas like batteries and other components, is actually very high as well. And I think this competitive advantage actually goes beyond autos because autos is not the only area that's electrifying. We look at forklifts, excavators, a whole range of areas, eventually robotics. These are all areas where electrification is actually really important. And I think a lot of these companies, given that supply chain, are in a really strong competitive position to leverage that position to grow market share. Onto valuations. So they do remain compelling. This is something we show every year, looking at that discount, particularly to the US. At the extreme, it was sort of 60%. We're probably in the range of about 50 now, but for similar growth outlooks, this is a really significant discount, to the US market. So, I'm of the belief that gap still has good potential to close over time. And if things like policy certainty and those sorts of factors ever enter, that sort of risk discount analysis, I think China has taken a pretty consistent and stable approach generally through this. And obviously they're on their 14th five-year plan. So again, from a policy perspective, the outlook in terms of policy is, I think, is pretty consistent, and particularly relative to some of the policy moves we see elsewhere in the world. Another, I think underappreciated part of the China story is that of capital return. So looking at the chart on the left, this is looking at sort of net issuance of shares as opposed to net buybacks. And when we sort of step back and try to analyze, China clearly has lagged other markets like the US over the years. We think this is probably a not insignificant factor. The US has been consistently net buying back shares, and China's been issuing shares. That changed last year. Last year was the first year China was, we had net buybacks instead of net issuance. So we think that's an important trend. And if you look at the chart on the right, if you look at that trajectory of capital return, and this is dividends plus buybacks, it's really significant. Obviously, this is something that's much more recognized in other markets. It's been a big theme in places like Japan. But the trajectory in China is not dissimilar to what you see in Japan as well. So there's real capital return coming back. Obviously, for the trust, we pay that back. We pay the majority of those dividends that we get back to our shareholders, and that's how we've been able to grow the dividend, over the 14 years we've been operating, and compound that at almost 30%. So we always like to give a couple of examples of the companies that we're looking at, just to give you a sense of what's out there. We try to come up with some new names. Xstep, I think, is a growing position in the portfolio. Sportswear is actually a really interesting category, and it fits in within consumption to one of those classic areas of low penetration. So your average spend per capita on sportswear in China is about 1/10 of the US. Still growing strongly, but still very, very underpenetrated. And Xstep has been a consistent share gainer. They're focused on performance running. As you see on the right there, they have top share of the marathon runners in China. What's also interesting is you may be familiar with a brand called Saucony. They have the rights to that brand in China, and that's growing at about 30%. They're getting better margins, in fact, much better margins on that business as they roll it out in China. So that is also going to feed into top line growth, but also will feed into better margins. So, this is a company that we're buying on a single-digit multiple. The capital return here is actually pretty positive as well. Net cash balance sheet, high single-digit dividend yield. Again, I think is a good example of the types of opportunity that are available to us in the consumer space in China. Next one, King D. So this is the number 2 ERP software provider. They're closing the gap with number one pretty consistently over the years. This is a market that's still, I think, very underdeveloped in China versus many markets in the West. Here we have the number two player in the market with about a $6 billion market cap. It's done well. You know, it's probably doubled from the bottom, but compare that to the size of companies in the West. Salesforce, you know, $300 billion company, and obviously SAP, Oracle, these guys are even bigger. They have different business mixes. Some of them have cloud businesses, but for me, that gap is just, you know, really significant. And I do think, you know, there's really good room to grow, you know, for a good operator in this business. They're very innovative. You know, they're rolling out AI functionality across the platform well ahead of peers. Areas like travel, finance functions, recruiting, that sort of thing. They're giving people these AI tools. And I should say, you know, the penetration of AI is happening at a really significant pace in China. And this is an example of a company that's giving its clients those tools. So the SaaS portion of the business is actually growing significantly as well. That will be a portion of the cloud business that you see there on the top. And that will, in the longer term, mean better margins. And we finally have some better cost control. This is something that we've had many discussions with the company on, and you can see what that means in terms of profitability. So, you know, we're really seeing a really significant earnings inflection for this company after many years of losses and pain for shareholders. So I think it's a really interesting time to be in this business. Okay, so on to performance. As you can see here, it has been, and as you well know, it's been a volatile ride. But I'm happy to report that, you know, we're now comfortably ahead of benchmark over pretty much all periods. And what's encouraging for us and the team is that most of this is coming from stock picking. We have, you know, I think suffered in some ways. It's been quite a narrow market, and obviously we have somewhat of a mid to small cap bias. Those trends are starting. The recovery, we feel, is starting to broaden. So hopefully that can be more of a tailwind for us going forward. In terms of the discount to NAV, relatively stable, I think, is how you would say it. Obviously, it would, you know, it'd be nice if it was lower, but I think, it's as I said, relatively stable. I'm very much focused on growing the NAV, and I think if we show that we can do that, there's good potential for that gap to close over time. The board is pretty active in the market, and I think we've bought back 5% of shares in the last 12 months. We do actively use or leverage the tools at our disposal, and one of those is gearing. I think many of you would have seen this chart in the past as well. It's not a perfect inverse correlation, but we try to be, China is clearly a very volatile market. Sentiment shifts significantly. And so we try to use that volatility to our advantage. So generally, the gearing will go up when the market's cheap, sentiment is quite negative, and then we're generally taking the longs and reducing the leverage into a period where perhaps the valuations aren't as exciting as they were, and things are starting to get priced in. So currently we're at about 117%. So with the recovery in the market, we have taken a little bit of money off the table, but still it's 117%. It shows that we're still quite positive on the outlook for the market. So on to sector positioning. As you see here, we do have a pretty significant bet in industrials. I just do want to preface that sometimes these classifications can be a little bit misleading. The biggest bet we have within industrial is a company called Tuhu Car, which is an auto repair platform. So potentially more of actually a consumption story. As opposed to a true sort of industrial. Having said that, we do remain focused on the areas that we see in industrials, that competitiveness that we talked about earlier. So the EV supply chain, areas like robotics, those types of areas are of huge interest for us. And that's what's coming through in that big exposure to industrials. I do think it's fair to say we remain overweight the sectors that we think will be a bigger part of the economy over time. Consumer, healthcare, technology, these types of areas, I think, when we look back, will just be bigger parts of the economy. And obviously, given everything we've talked about consumer today, I think there's a real value opportunity there as well. So if we talked about changes over the last 12 months, we've actually added to that, slightly to that overweight in industrials. Communication services is slightly higher as well, and that came through us increasing our position in ByteDance, which is actually our biggest private position. And you know, there was a great opportunity for us to add to that in the secondary market, which we grabbed. We think we've increased our position there at a single-digit forward multiple, which I think is quite exciting. The reduction would be in areas like the financials, where some of the insurance companies do face challenges from the lower interest rate environment. So we have taken a little bit of money off the table there. Onto the key holdings. Obviously, I won't go through all of these. You'll be quite familiar, but maybe I'll just touch on the top names. Tencent for us is still a core position. Still very well positioned. A core position in gaming, but the real story is around them. Leveraging the WeChat franchise. There's still great monetization potential with that, and real potential to monetize AI as well. I think areas like search, which would be dominated by players like Baidu, with AI tools, I think there's a real potential for companies with big user bases like Tencent to leverage that and really push into new markets. Not quite as cheap as some of the other names, but still really a core holding for us. Alibaba, this is attractive in terms of valuation for us, but I think you need to be a little bit wary about the competition that has broken out in food delivery. So they're the number 2 player in food delivery. So the likes of Meituan, Alibaba, we're just watching how that plays out. I think if we can get conviction that we sort of past the worst of that, there could be potential for Alibaba to be a bigger position, just given what looks like stabilizing share for them in general e-commerce and a strong leadership position in cloud. And again, the cloud is another area where the Chinese players trade at huge discounts to the US counterparts. PDD, obviously a very strong player in e-commerce as well, very attractive valuation. The stock has sold off. I think it's mostly over concerns about the Temu business, which is the global e-commerce platform you may be familiar with. I think this is more than reflected in the stock price for PDD, and this is one that I think could be a bigger position in the portfolio over time. And then ByteDance, as I said, our biggest unlisted holdings. We currently have about 10% in unlisteds, and ByteDance is the biggest position there. So it's effectively our biggest bet in the portfolio. Like I said, I think we think we've bought at a sort of a single-digit forward multiple, and this is for a business where international for them, i.e. TikTok, is losing money. So people, really the market is giving no value to TikTok, and I think there is, this concern about how things will play out in the US for TikTok, but that's 170 million users, which is not insignificant. It's half the population, but TikTok has over 2 billion users globally. So there's a lot of potential monetization value there. They're losing money now because they're investing, and hopefully they can replicate the type of success in areas like e-commerce that they've been able to do in China. So very happy with the position that we have in ByteDance. It's a really, looking across these top holdings, you'll see that it's quite a mix of names. There's some, there's a lot of value support in the numbers, but there's some quite growthy companies there as well. I mean, Hesai is the leader in the LiDAR space. They've just turned profitable. Pony AI, the leader in autonomous driving in China, not profitable yet. And despite those lower profitability or unprofitable companies, the trust itself in aggregate is trading on 12 times forward earnings. So it gives you some sense of the type of value that is represented in the portfolio in lots of the other names in the portfolio. And then finally, a new slide that we've added, just comparing returns versus peers, something the board was pushing for. So you can see how, I think the key point here is basically, we're achieving higher returns for lower risk, looking at the returns, relative to the sort of the variability of returns. I think the other point to draw from this is the overlap. So clearly, we have a more diversified group of holdings, and that comes through in lower overlap in terms of holdings versus peers and versus the benchmark. So, hopefully this reflects the fact that we're really spreading the net wide, not too focused on the benchmark, really just focused on finding the best ideas and getting those into the portfolio. And I think that's it from my side. Thank you.
Great. Thank you, Dale. We'll now take questions, but just before I do that, sort of some rules of engagement. For those shareholders asking a question remotely, your questions will be put to the meeting by Claire here. For any questions that we can't answer today, then a personal response will be provided in writing after the meeting. So I'll now take the first question from the floor. If you're asking a question, please raise your hand. A microphone, I hope, will arrive with you. Can you just state your name, and if you're representing an organization, then please give us that information as well. So, first question, please.
Hello, Dale. Richard Dennis, private shareholder. I was interested in your chart relating to patents, and noted that China has virtually now caught the USA up in patent numbers. But first question, do you think the number of patents companies are taking out is a likely indicator of future economic success for their companies and their economy? And secondly, I'd be interested in whatever you knew about what particular areas and sectors most of these patents are being taken out in.
Yeah, no, great questions. It's not perfect in terms of an indicator. I think it is important. It does indicate, some level of innovation. Like I said, we sort of struggle to, show the ways of the types of innovation that we see in companies. Obviously, the best example of that is the performance of companies and the way they're increasing market share across a range of industries, like we've seen in autos. But it does indicate something. I think it's an indication of basic research and sort of leveraging the STEM resources that they have to really grow. So, is it a perfect indicator? No, but I do think it does have some meaning in my mind. Just reflecting sort of, that basic level of innovation that's happening. In terms of the areas, I don't think, definitely the tech area, hard tech, I think is definitely a big area of focus. An increasing area as well, and you're probably seeing this in news that's coming out, is healthcare. So there's, if you look at China's market share of basically clinical trials, so looking, from phase 1 to phase 3, the total number of drugs that are in clinical trials, China's share of that globally is increasing as well. And I think in the past they would have been more of a follower, but you're seeing a lot more novel drugs that are coming out of China. And interesting, global pharma is now on the hunt, looking up to pick up and license a lot of drugs that are coming out in China. So I think healthcare would be another area. So I'd say tech and healthcare would be the main areas of focus. Yeah.
Please.
Hershit Kotecha, private shareholder. I just have one question, Dale. The recent surge in Japanese market after the deal was announced.
Right.
Do you see a similar situation when the deal eventually is done with US, the trade deal with China and US? Do you expect a surge in the prices of shares in the portfolio?
I don't know if you'd expect a surge. It'll obviously depend where things came in. I think for Japan, clearly, we were going in with an expectation of 25%, which was worse than expected, and is coming in at 15%. I do think it's a good indication of the US side's sort of commitment to get deals done. It's if we do come into that 30-40%, I expect it. In my view, that's probably consensus. So if we do come within that level, I'd be surprised if we saw a surge. What I think is positive is just having certainty. This uncertainty about markets always love certainty. So basically, to understand what we're dealing with, I think companies, once we have that, can start to make investment decisions and strategy decisions. I think for a lot of companies, that certainty will definitely be a positive for markets. Yeah.
Or private shareholder. Dale, are you concerned about the military build-up that the Chinese appear to be attempting at present?
Yeah, I mean, obviously they're not alone in terms of extra military investment. It's something we see sort of across a range of countries. It's not surprising. It's been pretty consistent. I think is there as forces build up throughout the region, does the sort of risk of an accident increase? Potentially, but I think as similarly for a lot of other countries, this is seen as a show of force. So, I don't think it's inconsistent. Then, I don't see a sort of material change in that general trend.
Colin Peckham, shareholder. Can you give us a few more details on the stocks you sold and why did you sell them?
Yeah. So I mentioned insurance. So as I said, selling some of the insurance names is really just about the level of interest rates is important for insurance companies. Obviously, it impacts the returns that they can generate. It impacts what they can charge versus what they can charge their clients. So it has an impact on spreads. The other things that have been sold in the portfolio, we've had a pretty good run in some names. So basically, most of the selling that I've done is reflecting price. So we try to be disciplined around valuation, and as companies generally are approaching what we see as fair value, we're reducing. So some of the other financials we've reduced as well. There's consumer finance names that have been honestly multi-baggers, and despite sort of the positive view I have on the consumer, we need to watch credit trends there as well. For any type of financial, that the trends in credit is an important trend. But other than that, it's stocks that have just done well, and we think the outlook is getting priced in.
So you mentioned insurance.
Right.
Okay, but I noticed in your top 10 you've still got Ping An.
I still have Ping An.
I just wondered why we kept that one and sold whatever it was you sold.
Well, yeah, I mean, everything is risk reward. We're sort of looking at how things stack up from a valuation perspective. I do still think the long-term outlook for insurance is positive. It's one of those classic penetration stories. People under-own insurance relative to, significantly under-own relative to other areas. And as people get richer, they want protection. And I think, Ping An has done quite a good job of trimming down their agency force over the years, being focused on very much the high protection, high profitability products. So the execution has been pretty good. They're just dealing with some headwinds now. So I think it's prudent to reduce the position, but again, I try to keep the long-term view. At some point, I think it will perform in the long term. But that's basically the view.
My name's Anthony Gerald Leong, private shareholder. Thank you, Fidelity, China Special Situations Chairman, members of the board, Dale Nichols and his teams in China, Hong Kong and Shanghai, is it?
That's right.
Big question. Oh, congratulations on getting a 1% of portfolio of CATL, Contemporary Amphorex technology. I was hoping and praying that you would get access because it was 168 times oversubscribed. They managed to raise, initially they wanted 4 billion, they got 5, to build their fantastic, probably sodium battery, which is absolutely revolutionary. The share price will go 1,000% probably in a couple of years.
Right.
But you got 1%, but Bailey Gifford got 3%. But they are a much smaller outfit. You did 14 million, they got about 6 million. So well done to you. I think Tesla and General Motors, instead of stealing CAT, was a secret because they've been doing research for years on sodium batteries because it's not rare earth. And they've done a deal, I believe, with CATL to license to build it. Otherwise, they would steal it. Right. My big question is still concerned around about that. BYD make their own battery. Second best, it does about 450, 5-minute charge. Caterpillar does about 480, and Tesla does 380. Well behind, even though they're using old Chinese technology. My question is, I asked you last year about BYD, and you said, you didn't give me any explanation. At least you wrote on the AGM report, too high valuations. But the PE ratio, when I looked at the FT the last month, was between 6.8 and 7. Toyota's round about the same. VW is about 5, but American cars about 10, Ford and General Motors 10 and 22. So I don't think it's so high valuations. And Warren Buffett bought 10% of the whole company 2 years ago, and he sold 5% of it to private investors. He's getting old, so he probably wants to bank what he's gained. No, he's actually in head. He's going to retire at the end of the year. But 10% is about 16 billion, but you haven't bought even 16 million. And why is that? Because they're opening 7 gigafactories in Hungary, Turkey, Indonesia, Thailand, Mexico, and Brazil, and not Germany. Yeah, I said Hungary already. About 7, and about 10 battery plants all over. So they're basically, according to the Daily Telegraph, Ambrose Pritchard, he said that BYD will overtake the world. Why aren't you invested in BYD, or will you invest in the future when the valuations are better?
Okay. Thank you. So if you're getting it on 6-7 times earnings, your numbers are much higher than mine. I don't think it's that cheap. But despite everything I said about the EV space, I'm quite negative on the competitive landscape. Yeah. There's when you think about the number of new players that have entered this industry, the extra capacity. Oh, absolutely. No, they're extremely competitive, but
down to about 19, I think.
There's still. I still think if you're looking 5-10 years ahead, there'll be far fewer players. I'll be much more interested in the sector when we see some exits, and it will happen.
You might.
Absolutely. I mean, I think they're the leader in the space, but I think now is not the time, in my mind. It's competitive. Yeah, okay. Well done. I think, yeah.
So the answer to the question is, will we keep our eye on BYD, just like any other company in the universe?
Warren Buffett
and Warren Buffett, no question, but we've got a universe of thousands of companies. And when we aggregate them all together, I think you'll appreciate the performance is pretty reasonable. We had another question over here.
Stephen Marriott, shareholder. Hopefully a more straightforward question for you, Dale. Industrials is a big sector, as you suggested, but it's made up of quite a few different sort of sectors and themes within that category. One theme that you've talked about in the past within industrials is the kind of sort of consolidation opportunities, and you've had some paint companies and sort of more traditional type sort of businesses. And I'm wondering, is that theme still there, or sort of given sort of sort of headwinds in the property sector, have you reduced that sort of area?
No, I think it's very much still there. I think that thematic is there. We track the sort of that pace of consolidation, across industries. But as we've talked about in the property sector, times are tough. So that sort of needs to enter the mindset as well. But the consolidation theme, is very much alive. And you mentioned building materials. We definitely have holdings within building materials. Again, quite out of favor, and having some struggles. But these are sectors where you still see sort of the top 3 players in 20-30% sort of share of market, and in the West it's 80%. So the thematic around consolidation is very much there. There's even there's still room to take share from foreign players in a range of industries. If you look at areas like robotics, 3 years ago, 4 of the top 4 players were foreign. Now 2 of them are Chinese. So there's still room to take market share from foreign players in many industries as well.
Thank you. We have 2 more questions here, and anybody else got a question, or should we have these? There's 3 more questions, right? So we're not quite finished yet. Yes, sir.
Yeah, Davies, private shareholder. It's been reported that a lot of Chinese companies are outsourcing their manufacturing to places like Indonesia, Philippines, Vietnam, will that sort of help to increase their profits when they sort of re-import these bits and pieces they have manufactured outside of China?
Right. It's very much a trend. You know, whether it's positive or negative for margins, I hate to say it depends. You know, it depends on the industry. You know, generally if you're building new factories and sort of, you know, there's initial investment, so it can be, you know, it can be a drag on profitability. Like I said, it really depends. In general, for Chinese companies, and obviously the way tariff plays out will be a big factor, but across a lot of the areas like industrials, they do make better margins overseas than they make domestically. Always domestic is very competitive. And that's why if you've survived the domestic market, you're going to be competitive overseas for a lot of companies. So
are the Chinese welcome in these other markets?
Yeah, I think in general, yes. Yeah, I think in general, yes. I mean, people are looking for investment. You know, the Chinese companies have, many of these companies, this is not a new thing for many companies. They've been investing overseas for quite some time, particularly in the region. You know, as you mentioned, Vietnam, Indonesia, these types of areas. It's definitely a push that's been there and probably getting stronger for the Chinese companies, for sure.
Okay, thank you.
Yeah.
Next question, Nicholas.
Nicholas Bull, private shareholder. Dale, do you see any evidence of Chinese savers using the stock market for their savings? Because if we're going to narrow the valuation gap, we need more buyers than sellers.
Right. Yeah, I mean, something we were just talking about this morning with the board, but we're seeing things moving in the right direction. So versus sort of the average over the past few years, if you look at things like opening of new accounts, margin balances, and that sort of thing, it's improving. But you know, it's definitely nowhere near sort of fever pitch that it was in 2015, et cetera. It's not like that, but it's moving in the right direction. You know, it's interesting, the A share market has quite lagged you know, the Hong Kong market. The Hong Kong market has outperformed quite a bit. So I think if you saw an environment where that started to readjust, that would probably get more domestic interest. But in general, things I think are moving in the right direction.
Madam, now is this, anybody else got a question coming up? So we might make this our last question. Madam, please. At the end of this question and the answer to it, the polls will close. So those voting online or those that are filling in forms here, we've got about 2 minutes until your deadline arrives. Please, madam.
Jill Jordan, private investor. It's a question about batteries. I don't know very much about batteries, but you mentioned batteries before. Sorry? The Chinese seem to envy some batteries that are produced in Taipei. This may be a very silly question, but the type of batteries that are produced in Taipei, are there factories in China that produce the same?
Taiwan is not a big producer of batteries. Yeah. There's some interesting solid state technologies that are coming out of Taiwan. So it's early stage, and you know, solid state, higher density, you know, has, you know, sort of, it's been talked about for quite a long time as having potential, but it's really some way off. It's really some way off in terms of commercialization. So and all the Chinese players are investing heavily in solid state R&D as well. So yeah, out of Taiwan, there's some interesting technologies, but I still think it's early days for solid state. It's and even when it ramps, it's still going to be a relatively small market. I think it'll be quite niche. You know, you talk about Toyota. Even for Toyota, the numbers that they're talking are a fraction of a CATL. So I think even in the long term, solid state will be a relatively niche market. Yeah.
Okay, thank you very much. I think that means the questions and answers are finished, and therefore the online voting should now be concluded. There was no, sorry, I've been checking with Claire. Good point. There haven't been any online questions. With your permission, I would like to draw the formal business of the meeting to its conclusion. For those in the room, your poll cards will either be collected or please give to this gentleman over here before leaving the room. Those proxies that have been cast in the past are now on the screen, I think. Yep. Oh yes, here we are. So those are all the votes that have come from institutions and private investors to date on the resolutions, and your votes will all be added in to those, and once scrutinised by the registrar, the results will appear on the website and I think will be announced to the stock exchange. So, thank you very much everybody for attending this year's AGM. I hope you found it interesting. We very much appreciate, the board very much appreciates you coming along. The more the merrier. And hope to see you again this time next year. And please join us for some refreshments outside. Thank you very much.